The markets are running hot right now. We got some decent earnings reports, some good GDP numbers. The job market continues to be strong. And everyone seems to think that the bear market is over and we're going back to bullish. But I'm not quite convinced, and I know Kevin isn't either. We're going to dive into all of that. But first, please make sure to hit that like button, subscribe to our channel. Nothing we say is financial advice. Please do your own research. We are not financial advisors. We're two guys who really enjoy following the markets, thinking about it, talking about it. And you're just going to hear kind of some of our ramblings and the way that we're approaching it currently. So, Kev, since we talked on Monday, I said we had a lot of data coming in Thursday, which is today. And, some of that was better than expected. The job market continues to be hot. Initial jobless claims came in about 10% under expectation. GDP for Q4 is still looking strong, came in slightly over expectation. We have earnings, some good, some bad. Intel reported this afternoon that did not come in very hot. So we're seeing some issues in the, in the semiconductor industry right now. So I don't know, man. I'm not feeling the same bullishness that a lot of people are. And I don't know if that's just me, being stuck in my ways, or if there's still, enough like macro indicators that should suggest that we're going down further and this is just a temporary rally.
Yeah. Definitely I've questioned whether we're in a bull run or not. Obviously, sentiment is extremely positive right now. It's almost to the point where it's just like pure greed. I'd be interested in seeing the Bitcoin Fear and Greed Index to see how much that's evolved in the past 26 days since the beginning of the year. But yeah, a lot of people are bullish. I've doubled down. I feel like maybe that's foolish, but I do not see the macro being. I think a lot of people are thinking it's getting better, and I think it's getting a lot worse before it gets better. Yeah, I just can't. I don't buy into a lot of what other people are seeing. We're seeing some data that is positive, but necessarily there's still so much that we haven't experienced in this year yet. We still are waiting. The market is weird. The market's just waiting for Powell to speak at this point. Obviously, it shot up and rallied up, but now it's in this phase where it's like, okay, we made the move. What's the next move? Whether it's going to be a liquidity grab or if it's just going to be, up only from here on out, it'll be really interesting. But I'm not buying this narrative that we're back.
Yeah, just for the Fear and Greed Index, currently at 54, so neutral. Last week it was at 45, and then last month it was at 27. So we've seen, people like kind of ease back into the thought of buying Bitcoin. We'll get into some of the technicals of the charts, but Bitcoin, it's done well, but it's definitely hit resistance at this 23K level. It's gotten up to like what 20. It's wicked up to like 23.5, 23.7, but it's always come back down, and we're kind of trading at that level now, and we'll see. I think right now we saw that nice little run up because there wasn't a lot leading up to this Fed meeting. We have some more PCE data tomorrow that's going to give us. I believe that's the Fed's preferred measure of inflation. So I think they give a lot of credence to that. And everyone's still expecting 25 basis points. But if we see a hot number tomorrow, combined with the fact that the jobs market continues to be incredibly strong, it wouldn't shock me if, the Feds were like, what, we got to do 50. The market is too frothy right now. Like things are running up way too much. I mean, you look at stuff like Tesla and Facebook, where they've recovered tremendous amounts, and they were oversold for sure. But I think the Fed is still just like it's too much right now. We got to put the brakes on a little bit, and I would rather they just rip the bandage off as opposed to us like dicking around with 25-point hikes here and there, and then a few months from now or later this year we see that's not really doing anything.
Exactly, I agree. It's I'm still of the conviction that we're going to see a 50 basis point. Again, from our last episode talking about Powell, the recession from the 70s, multiple recessions in the 70s into the 80s, I can't see a world where they're going to let this play out in a similar fashion unless they want it to. But that would just be the ultimate slap in the face and destroy the U.S. economy for years to come. There's just so much on the outlook for 2023 that we're there's not FUD, but people are actually really interested in seeing how this plays out. Like, for example, is China going to lift its COVID restrictions? That would have a huge impact on inflation. It'd have a huge impact on the oil industry. So it's really interesting to see. again, I agree with you. Needs to be ripped off. Need to just get right through it. 50 basis points, and hopefully we just see this level out for a period of time before they start to reduce rates. I just don't want to go back to, or I haven't experienced it, but I wouldn't want to go through 20 basis points or 20% rates for the federal government. That'd be terrible.
Yeah, for sure. So let's talk about some of the macro that's going on. Gas prices are on their way up. The running joke on Twitter is that, a carton of eggs is your most valuable asset at this point. There's still like so much price that isn't moving. Like we're seeing some decent downward movement in, mortgage rates have started to come down. That's good. So people are going to start, buying houses again. Rent is starting to come down in some areas. That's good. But like food is still like, I haven't seen, like I've said before, I'm a creature of habit at the grocery store. I buy a lot of the same stuff week in and week out. And I haven't seen any price movement in a lot of these like necessities. If anything, they've gone up. Gas has gone up so far this year. And with things escalating in Ukraine, that's just even more likely to continue. So, how are you looking at the macro right now? And where do you think that, the direction of CPI and all these other, data points that we look at is going to go?
Yeah. So I think it was one of the last CPI data releases that you and I talked about how much energy goes into the CPI and, where inflation is. And we're seeing gas like 9.5% already up for unleaded regular from the beginning of January, which is a huge spike up. Like we saw gas prices going down into the election. And then 2 months later, now we're starting to see them go up again. So that's not necessarily a good thing. Obviously, it seems like there's escalating tension between Ukraine, Russia war. Also, to say that Germany and the United States getting involved again, that's not necessarily a good thing for energy or oil. Again, last time we saw a huge spike in those, that was 100% from the beginning of the war, and the United States government attributed to the war itself. But maybe even getting involved further, that could potentially hurt the price of oil for a lot of people. So that could also cause inflation to spike. So it's really just, there's so much just coming together all at one time. It's really like I don't know. It's just not something that I'm optimistic about, or it's going to come out as like FUD or just anything that I can't speak today. I'm so sorry.
It's all good, man. It's all good.
No, it's like 80 degrees in here. Yeah. So pretty much, I don't anticipate any of those things to, come out in the wash, or, this is just FUD that, oh yeah, the war in Ukraine isn't going to get worse. I mean, you don't know that. Any of this stuff could potentially happen. Like, even like I said, COVID in China, like those restrictions, once they're lifted, production is going to go up. That's going to cause, oil to go up, and then the demand for oil and then the price of it going up, it's going to skyrocket. So, and again, like that plays a huge part into the CPI data. I don't anticipate that be good for inflation, and people like Michael Burry are already anticipating there to be an inflationary spike at some point. So, yeah, that's my outlook for what I see with a lot of the energy issues that we're seeing with potential outlook for the macro.
Do you keep track of the price of oil at all? I mean, is that an area you've considered, investing some money in, is kind of looking ahead there to some of the concerns you have? Because you make a lot of really good points right there, and I'm wondering if there's an opportunity in that market to maybe we do like the Always Sunny thing, and we just like buy a bunch of gas now and then just like store it in our basement and wait for the price to go up and then sell that gas back. Like, is that an option?
That'd probably be the easiest way to quickly liquidate any longs that you have in the oil and gas market. I don't know if they'll let you sell anything on the New York Stock Exchange anymore without collapsing. So that's probably the best way for guys like you and me to get into the oil market. But no, I don't actually keep track of that. But again, it's pretty smart when, like, say, even when Biden came into office or when the war started, if you were going to go long on oil, that probably would have been a pretty good time to do stuff like that. There's definitely opportunities to do it. Would I do it? If I had a little bit more money and I was willing to allocate a little bit more towards that risk, absolutely. But obviously, I'm just trying to play stuff safe right now. Like, I forget who it was from JP Morgan. I don't want to touch anything for 6 months. I'm 100% risk off.
Okay, I don't think that's a bad approach to take. Like, we've said it before, we'll say it again. Whatever you got to do right now to get your hands on some cash, in Ace's situation, get your hands on some copper. Whatever you're doing, get that copper wire. Go find some old abandoned homes, whatever it takes. Continue to sell blood, whatever you got to do. You got 2 kidneys for a reason, right? You only need one of them, but we're coming in. We're still in, and going to be even more so, in my opinion. And cash is king season, so I'm doing whatever I can to try to increase my my cash position and just make it through this, man. So we talked last time about increases in car repossessions, how banks are looking ahead to more debt being unrecoverable. I know you looked into that a bit to kind of see if there are any trends that went along with car repossessions, housing market crashes, things like that. So what did you find when you dug into that?
I found that there's not a lot of year-on-year data where it tells you exactly how many the percentage of repossessions that occurred within a given year based on how many loans are out there. But I did find some trends, mainly from 2007, 2008, where you would see tons of loans and the length of loans increasing, and that potentially just destroyed investors and caused repossessions, because while they're making some of those payments in years where they had some financial, a little bit more wealth than they would in the years it was being repossessed. Once those years in like 2007, 2008 started coming by and they couldn't pay those loans and they were increasing and the interest on it was increasing, then you would start to see people just like default on their loans. So we saw delinquencies all the way up to the point where they defaulted. But a huge part of that was basically the length of the loans that were being issued. And let's see, from 2007, it was somewhere around, it was right here. 2007 was about 5.75 years. That was the average. And
okay.
That's arguably, no, my bad. That's 2022. And it was between 6 to 8 years where we were seeing some of these loans come in for auto in the year of 2007. So that means pretty much you're paying less month on month. However, the initial principal is not coming down at all. So a lot of times when people started, the credit started building up and they couldn't afford to make some of those payments, when they try to liquidate the vehicle, they weren't able to do so just because they didn't pay off enough. And pretty much it would have been easier for them just to lose the car than it would for them to trade up and potentially accumulate more debt. So that's what we were seeing in 2007. A lot of it was due to subprime loans along with some of the prime loans. And we are seeing that again today. We're seeing subprime loans are increasing while prime loans actually doubled in the year of 2022. And the interesting thing is a lot of people are kind of like expecting it to be the reasoning for, obviously we printed tons of stimulus checks, and that was the reason why people were buying into these cars, and now they're not able to because the funds just aren't necessarily there. That's part of it. However, leading up to 2020, we were seeing the auto loan pretty much not industry, but auto loan market just, seeing tons of delinquencies, tons of defaults. And they think that the stimulus package and the stimulus, funds that we got necessarily kept us from hitting the actual bottom in the auto loan market. So potentially
maybe all these car repossessions are going to balance out the demand for fuel. So like people are getting their cars repossessed, won't be as much of a demand for fuel. So maybe energy costs will go down. I don't know. Like, let's try to spin this positive, right?
Yeah, I mean, that's one way we could look at it. I don't know if it works that way. I'm also a smart man, so I'd be taking your word at that point. But yeah, it's similar, but it's not. We are seeing loans now that are ranging between 5.75 years, so five years, 9 months. And then we're also seeing some that are going as long as 84 months. So the timeline between those is pretty even. We're also seeing, I forget which bank it was. I said JP Morgan in our notes, but I don't think it was them. They talked about how, consumer credit is pretty much deteriorating at this point. So obviously if this credit begins to get to the limit for a lot of consumers, they're not going to be able to pay off some of these loans. And that ultimately is going to just lead to repossessions. So that's two factors that are potentially leading us to a point where we are going into a recession. Most people assume that but they would agree that repossessions technically lead into a recession. So that statement that you made last show, I would say is valid. But I think a lot of the issues that happened in the auto market or the auto loan market is prior to 2020, and we're just starting to see even worse consequences based on how much spending consumers have been doing over the past few years.
Yeah, for sure. I've said it before. I'm going to say it again. If this year you are carrying a credit card balance and you're paying interest on a credit card, you are out of your goddamn mind. You need to get your shit together. Like it's mind numbing to me, Kevin. Like I get it that like money can be tight for some people. Man, like figure out a budget. Like do a budget. Like most people like, oh God, this is going to get me into a tirade about how like financially illiterate most of this country is because it's not taught anywhere. But like put together a fucking budget and stop paying credit card interest every month. You are shooting yourself in the foot. Holy shit. This is a batten down the hatches, live below your means, quit worrying about what kind of stupid pictures you're putting on Instagram to flex on shit. Like get it together and survive this year and give yourself a chance to prosper in future years. End of my tirade. Let's get into some of the charts. We're definitely going to talk about Matic because that baby is humming and I'm feeling pretty good right there.
All right, I'll take a look at it. I haven't seen it actually. Like again, most of the stuff I've been looking at is more. It's weird. I've been looking more at the fundamentals, not necessarily the technicals. Obviously, the main stuff for DXY and BTC, but let's pull that up. And there we go. All right, for the DXY, we're seeing how strong this is. Like we're seeing everything pump right now, but the DXY has not moved at all. We're actually seeing a green candle today. Is that impressive? No, not one green candle after we've seen this decline since September. But I still feel that we're bouncing off this support level right here. What is that? 101.474. This range right here is historical between this and the blue line. We see that the daily stochastic RSI is coming to the upside. We have about 2 hours before it closes. We'll see how much that moves up. But again, we're seeing stuff like the S&P's up 45 today. The NASDAQ's up 236, 205 for the Dow. And then Bitcoin, obviously, right now it's up $1.08. So it's been kind of sideways for those assets. But we're holding strong on this thing. And I really want to see this just play out. We're obviously not going to see too much momentum till the FOMC, whether that just absolutely tanks and we're going deeper than anticipated, or if obviously the stochastic RSIs, along with a lot of this historical support and the fact that we're pretty much oversold on every time frame. There's the weekly, absolutely sidelined. Like, look how many red weeks we've had. We've had 1, 2, 3 red weeks. That's an engulfing candle to the downside on this one. So I would consider that to be even negative at that point. This has not been positive for the dollar for the past few months. Again, I'm at the point where I just see something that looks bloody and I see opportunity, and the dollar paired with everything that we've talked about on the macro just seems so bullish to me. And that's not financial advice at all, but I just see something that's so oversold, so undervalued. It's almost like people who are looking at Bitcoin maybe 3-4 weeks ago are saying, oh yeah, it's so oversold, it's undervalued, and look where it is now. So anything can change. Obviously, we need to wait for some more of the fundamental stuff to come out, where we could see if people are placing their bets on the U.S. dollar. But as I've seen banks and other institutions say that they're staying risk off for the next 6 months, that might not be. This might be the move ahead, or that might be their move ahead of whatever comes out on February 1st.
Yep. Okay. Let's keep rolling through. Let's get into Bitcoin next.
Absolutely. So Bitcoin, you mentioned it a few minutes ago, but we got rejected at that 23 level. It actually went up to, we went up to 23,816. And there's a few things that are important to note. Obviously, we see that we're coming down in the daily stochastic RSI, which tells me that two things. We aren't making much price movement to the upside, so the stochastic RSI is coming down. I think a lot of this is just fluctuation in momentum. Not necessarily a lot of people are sure which direction this market's going to go. So we're seeing, some of the shorter time frames move faster than others. We've also seen some pretty good range fluctuation, like coming up here, down, here, down. We're seeing the stochastic RSI on the 4-hourly, which is the lower time frame, still moving a good amount, but coming from here to there, obviously stayed oversold until it finally pumped again. There's just a lot of volatility I'm seeing on the shorter time frames, and I still think it's because we're in liquidation season. And even when this is all over, obviously we're going to be liquidating people going to the downside. There's going to be a pullback at some point. It's going to be between 50 and 80%. And that's being optimistic. 50 to 80%. It's going to be what we see in most beginnings of waves to the upside, especially in bull markets. But there is going to be a pullback. I'm just not seeing necessarily any long-term growth here. I still believe that this wick that we saw last night, you can see it best on the weekly, because the weekly 200 EMA is right here. We shot right up to it and got rejected instantly from it. Like I remember seeing when we crossed and hit that line, and then maybe 5 minutes later we got down. We pushed down probably like $900,000. So it was a hard rejection at that level. Will we go up again? Probably. Obviously, we're still liquidating as many people as possible. The dollar isn't necessarily going up too much to the point where it's holding other risk assets from going up. But yeah, I think this 200 EMA is a huge level of resistance for Bitcoin right now. That's the one I'm watching more than anything, again, through all coins, because every time we come to the 200 EMA, we get rejected, got rejected there. I don't anticipate us coming, back just a little bit to push to the upside. This 200 EMA, anything below that is technically considered a bear market, and I wouldn't be surprised if a lot of people are starting to get a little bit cautious, knowing that the price is going to come down. That would also bring the 50 EMA down, and that could potentially lead us into our death cross, which I still believe is going to happen. February, March just got pushed back a little bit with this pump, but it's due to come. I think a lot of people are just ignoring stuff like this, which is extremely important. And even as I'm looking at this right now, from here to here, we are seeing this drop, this push, this volume came down, and obviously this price is shooting up. But that's bearish divergence right there. We're seeing the volumes decreasing while the price is increasing, and that's not necessarily a good thing to see. So that's just one thing I just noticed right there. You probably find it on the stochastic RSIs too. Let's see. Yep, right here. Same exact place from this level from the FTX collapse to where we currently are. And we could look right here. This stochastic RSI from overbought, we made a higher overbought territory right here where we currently are. So that's not necessarily something that's interesting to see. It's not great to see. But yeah, that's just two things that I'm seeing that are technical and are not necessarily bullish long-term for Bitcoin.
Okay. Let's get into, anything else, any other charts that you found interesting looking into today's show, or is everything pretty much, standard, for the most part? Like, I'll let you kind of lead where we go from here, if you think there's anything worth touching on.
Yeah, I mean, I've been focusing mainly on Bitcoin because I still believe Bitcoin leads the bull market, and necessarily I don't think that we're in a bull market yet, but there's still a really good chance that we're not, and we're just going to just come down crashing. So the only thing I would maybe see is, like, let's see what the BTC dominance looks like right now. The Bitcoin dominance is necessarily just Bitcoin's strength against other assets. And right now we're at 44.3, so that's 44.3% against other assets. That's the strength that Bitcoin has. And we are in the weekly pretty overbought. So that tells me that, and the daily stochastic RSI is coming down. There might be a little bit of short-term push further to like maybe 45, 46 against other assets. But once Bitcoin has pretty strong BTC dominance, I would anticipate any move that it makes, everything else would pretty much follow. And I still think that Bitcoin's got a huge move to the downside right now. That would absolutely destroy a lot of other alts. So that's why I'm just focusing right now on Bitcoin. It's something interesting to look at. I don't look at it always, but it's been rising since, let's see when, January 10th of this year. So it's shot up a pretty good amount. Let's see, from 40 to height at 44.81%. So not bad. Probably like a 10% push.
Okay. We don't really need to get too much into ETH. It has, it's tried to push up to 1620, 1625 a few times, but keeps getting rejected there. Although it has stayed pretty consistently over 1600. So seems to be a little bit of strength there, but all it takes, everything is just so news driven right now, man. Like all it takes is one bad report that, and maybe Powell wakes up one morning and has a bad morning constitutional, and he's in a pissy mood and says something that's going to scare the market. So I'm still a big time ETH believer long term. I wouldn't be going too hard into it at these prices though, personally.
Yeah, I couldn't agree with you more. I mean, he doesn't have his prune juice, and then he's going to release the FOMC rate hikes that day. It might get brown real fast. All right, but
maybe he's a little more irritable up at his presser, and he says a few things. Who knows?
He's got an unhappy stool inside of him. All right, get back to the charts, but this just pull up Matic. I haven't looked at Matic at all, but I haven't deleted anything off the Matic chart since we've been talking about it since, I don't know, October. And obviously I was talking about this huge parallel channel we're talking about in the macro. And Matic currently on the daily looks like it's going to break back up into this. Let's see the weekly, what that looks like. All right, weekly looks like it's about to make overbought territory. And we're kind of entering this channel right here. This was that channel that we've been trading in for the longest. We broke out of it. We're retesting it. I mean, that's pretty amazing that on the weekly we shot all the way down here to what, 74 cents. Now we shot up to $1.11 and we broke back into this channel. But like I said, the weekly's coming down. I'm looking at the volumes from here to there. They're decreasing. That's a bearish divergence for me. Let me check what the monthly looks like. Monthly, is that tons of volume?
We got a long ways to go before I'm going to win that bet, but you know what? I still feel good about my Matic buys.
Yeah, I mean, that bet obviously is going to probably come down to the wire unless market makers just decide to say, screw it, we're going to sell everything to retail, and then we'll buy back from them after, the next 75 basis point months to come. But looking at this, I think that there's probably some move to the upside on the daily. Looks like the stochastic RSI has some room. Today it actually pumped a good amount. What is that?
Yeah.
Did it really shoot that much up today?
Yeah.
What?
It had a good day. Yeah.
That's 13%. Okay, no, this thing is going to zero. Not financial. But that's BS. Okay, I don't care what is going on. This is the type of anger I have in the market right now. The market is broken, JWeb. This makes no sense. No, but for real, Matic is a great project. I do believe in it long term. However, there is one thing on the charts, and I always show it. It's November 2018 to December 2018. Within a month, Bitcoin dropped 51%, and everything else bled like crazy. And this is going to be no exception. People are going to get absolutely liquidated, and that was not even in a recession. We're going to go into a recession. It's going to be so bad, and everyone is going to get destroyed. Hold on. Give me my.
You're like having to hold back a smile on your face right there, you psychopath.
Because 12%, insane. I mean, good for everyone who's holding Matic. Obviously, I don't care if people make money. That's not important. But when I just see when I look at the charts and I see everyone being extremely bullish, and I just know the markets, how they work. It's like I told you before the show. It's be humble or be humbled, and people are being greedy as could be. They're not being humble at all, and that tends to be the way that people get caught out, and that's what I'm saying. But when I look at this chart, absolutely, this is a liquidity grab. I wouldn't be surprised if we pushed up a little bit into this channel. But again, you're in this channel, and then you're overbought, and then you're overbought on the weekly. You're gonna fall right out of it, and then you're gonna go retest those lows at the next support level again. What would that be? Probably below 94 cents. I mean, if Bitcoin dominance goes higher than 45 and that crashes, absolutely, you're going to 30 cents, and I win. So that's what I see, JWeb.
Not gonna happen. I'm gonna win that bet. God damn it! I want that $100.
You could have $100.
We end at 31 cents, and I get the W there. I'll take it.
Yeah, but we're talking about U.S. What is it? No, oh man, that would have been a better joke if I remember what the stable coin was for Luna. UST.
Yeah,
we're talking about the Matic UST trading pair. Yeah, I win 30 cents.
Oh man, yeah. I keep like it. We've talked about how on that market cycles chart, to me, it feels like we're at that point where things are starting to come up, and then we have the capitulation event, and we finally hit capitulation. Because even with how bad last year was, I think that I don't think we hit capitulation. I don't think that enough people rushed for the exits. So I don't know if that event is going to be a black swan in the crypto market. I don't know if it's going to be something globally that causes that event to happen, but it's just something's coming, and I feel uneasy about it.
Welcome to the dark side, JWeb. Like I sent you that one tweet that Michael Burry sent out, and he said maybe, and we're looking at the S&P, and it says rally. It says fractal from 2001, 2002. I'm like, that looks identical to what we're seeing right now. So everyone's just getting super bullish at this one point. Oh, that's the bottom. But no, there was months, like almost a year of just absolute like downside, or not downside. What is it, like a mudslide? You just see the price just flying straight down. So he's a pretty smart guy. I'm not gonna necessarily agree or disagree with him, but when I saw that, it gave me a little bit more conviction in what I had been seeing too. So it'll be really interesting.
Yeah.
I don't think the capitulation's been here yet. I think it's going to be more played out, and it won't happen until you see big money really come into the space. But when I see people going risk off right now, I don't see the wallets accumulating, tons of Bitcoin above, the 1,000, 10,000 level. It tells me that retail is just buying and the price is just trading within a certain range. Doesn't give me a lot of strength in believing that, this is the time to buy. Not for me personally, not financial advice.
Yep, I'm right there with you. Okay, that's going to wrap it up for today's show. Thank you, everybody, for being here. We appreciate it. Once again, hit that like button, subscribe to our channel. We put out crypto, stock, even NFT content 4 days a week. So we're here all the time. We love talking about this stuff. Kevin, any final thoughts before we head out of here?
No, I mean, just make sure you listen to JWeb and do everything you can to make a budget. Pay off your cards, because if you get a 50 basis point hike in the next few weeks, you might not be able to buy those. You might have to buy some off-brand pistachios or something. I don't know. I'm not a consumer. I just buy crypto. I don't eat food at all.
Okay. He just drinks the tears of the people who got liquidated. That's going to do it for today. Thanks for watching, everybody. We'll be back on Monday. Have an awesome weekend, and we'll see you next time.
See you guys.